Hello, everyone. My name is Katie Ingersoll, and I'm the Director of Programs at SMU DataArts. As we get started, I would also like to take a moment to introduce my colleague, Dan Gordon, who's our Support Center Manager at SMU DataArts. He's going to be joining us this webinar and keeping an eye on the chat and the Q&A. Thank you for joining us today to learn about the changes we've made to the cultural data profile and how these changes will affect your data entry experience. Today's webinar will focus on the streamline survey through the perspective of unaudited organizations and organizations with under $50,000 in expenses. This will be a quick and brief exploration. Will only take about 30 minutes of your time today. Before we jump in, some quick housekeeping. We have a number of people here today, so I'm going to keep everyone on mute for the presentation so that we have good sound quality. At this time, we do ask that you take a moment to take a look at some of the important features within Zoom. First, you'll find the Q&A feature, where you're welcome to add any questions you have about the content of today's webinar. Feel free to add questions throughout. Dana's going to be keeping an eye on that Q&A and answering your questions as we go through the content. We also have a chat feature. That is a great feature to use if you need to reach our team to help troubleshoot any technology issues you may experience. And for anyone who may want to utilize the closed captioning feature, to activate that feature, simply click the CC icon for closed captioning at the bottom of your Zoom feed to turn on those closed captions. If you need any assistance with this, you can also send us a chat. And finally, to preempt the most common question that we get, yes, we are recording this webinar, and we'll send you a link to that recording that you can review later and share with your colleagues who might not be able to join us today. With that, let's go ahead and get started. So as we prepare for these changes, we have created 4 30-minute webinars that explore the streamline survey and provide context for different types of organizations. Many of you were able to join us for our webinars last week, where we went over some basic information about the new survey. We also had a webinar like this one, specifically for audited organizations. Today's webinar will focus on data entry tips, specifically for organizations who do not have an audit and organizations who have less than $50,000 in annual expenses. Our final webinar, which will be on Thursday, will be dedicated to the new narrative questions in the CDP. Each webinar is being recorded, and they'll be available for you to review at the link at the bottom of this slide. I want to start by returning to a concept that we touched upon in our webinar last week, which is striking a balance between the benefits of data and the capacity that is needed to track and collect it. As you probably know, our mission at SMU DataArts is not to collect data for data's sake, but to empower the arts and cultural sector with insights and benefits that data can provide. As we were making decisions during this streamlined process, we were considering the benefits that each data point in our current survey brings in terms of research, insights, and advocacy, and balancing those benefits against the time and effort that collecting and reporting each data point requires from participating arts organizations. We've depended upon feedback from our users throughout the process to get this balance right. So thank you to any of you on this call who might have participated in any of our calls or open comment surveys to give us that feedback. That brings us to our goals for today's webinar. So we're going to walk through the sections in the new cultural data profile with a specific focus on unaudited organizations as well as organizations with expenses under $50,000. I will provide some reminders of what is changing and not changing in each section. Some of this will be a review from our webinar last week. We will also provide some specific data entry tips on some new or drastically changed areas, including special fundraising events, revenue, expenses, and renewal rates. Before we walk through each section though, I want to take a moment to review the 3 different types of organizations that will complete the cultural data profile. They are audited organizations, unaudited organizations, and organizations with under $50,000 in annual expenses. Each of these categories of organization will fill out slightly different versions of the survey. Let's take a look at unaudited organizations. This is defined as an organization that has not engaged in an independent accountant or accounting firm to audit or provide a financial review of their financial statements. This can include nonprofits who are not large enough to need an audit. The limits of when you'll need to do an audit are usually set by each state. It might also include fiscally sponsored organizations or organizations who operate under a parent entity. When completing the CDP, unaudited organizations use internal financial records, bank statements, their 990. They may likely use a P&L or other statements from their online accounting software. Because they have not been audited, these organizations will complete a balance sheet in a single column. Finally, the last category of organizations who complete a CDP are organizations with annual expenses under $50,000. I do want to note that these organizations are also unaudited, so they actually also technically do not have an audit, but we put them into a separate category in terms of filling out the CDP because they often have less extensive financial data to input into the CDP. These organizations will use internal financial records to complete the CDP. This might include reports from accounting software or possibly just spreadsheets that are used to track revenue and expenses. This group could include nonprofits, also fiscally sponsored organizations, or informal unincorporated organizations. You don't need to have nonprofit status to fill out the CDP. These organizations will not see an option to enter restricted revenue. They will complete a single column expense section without the 3 functional columns of program, management in general, and fundraising, and they will also not complete a balance sheet. So let's begin our walkthrough and review of the Streamline survey. We are going to start with revenue. And I'm going to start by looking at this section for unaudited organizations only. You'll see me kind of switching back and forth between those two groups that were, all of you today on this call fall into hopefully one of these two groups. So keep an eye on those tags at the top of the slides to see which organizations I'm addressing when I mention these changes. So what can unaudited organizations expect in the revenue section of the new survey? So there are still 4 different sections: earned revenue, contributed revenue, investment revenue, and non-operating revenue. You may or may not see non-operating depending on whether you've indicated that you have non-operating revenue when you set up your survey. We have reduced the number of line items in the earned revenue section. It's shorter now. The contributed revenue section, on the other hand, has not changed very much. You'll see most of the same line items. You may see a column for restricted revenue, but you'll only see that if you've specified that you have restricted revenue in your survey settings. So let's take a look at organizations under 50K in expenses, and what does their revenue section look like? So for these organizations, you'll see more data points within this section than what was available historically, because we've made a change so that the revenue section is similar for orgs under 50K and unaudited organizations. This means that the profile will have a few additional line items, but reports for small organizations will also look similar or the same to reports for larger organizations. You will now see different sections within the revenue section to enter different types of data. Before, you probably saw just one single revenue section. So this includes earned revenue. This will include revenue earned in exchange for programming or services. So you would put your ticket sales or your workshop fees into the earned revenue section. It includes contributed revenue, which is anything that was given to your organization as a gift. So contributions from individuals, for example. This also now includes the number of contributors of different types. You will see an investment revenue section. If your organization doesn't have any investment revenue, you just skip right over this section entirely, but it is there in case you do have that. Organizations under 50K will not see non-operating revenue. They will not see a column for restricted revenue. So I do want to note that for all organizations, revenue is probably the least changed section in the survey. This is because the data collected in these sections provides a good snapshot of the revenue model that keeps your organization sustainable. It also helps us understand fundraising and earned revenue trends across the sector. This section in revenue is probably one that's used most frequently in our research, which is why we haven't made a lot of changes to it. So within the revenue section for both types of organizations, the main effort will be matching the line items from your financial statements to the line items in the CDP. I'm going to show you a quick example of that. So you'll start with your financial statements. Here we have an example P&L from a fairly small organization. Some of you may have a P&L like this from QuickBooks, or some of you may just have a spreadsheet where you track your revenue throughout the year. Either way, the process will be very similar. So on the P&L, you'll go line by line and match each item to the best line item on the CDP. So for example, at the top here, we have membership revenue. That is going to be entered into the earned revenue section and the membership fees lines. Next, we would go through our entire financial statement and make sure every revenue line item is entered into the CDP. Even after you've filled in all this information, there will be lines that you haven't touched at all because they don't match any of your revenue items, and that's okay. If any line items don't apply to you in the survey, leave them blank. You don't have to enter a 0. Now, this was a this example was a pretty straightforward one-to-one match, but there are some cases where it might be more complicated to match your statements to the CDP. So first, you might find that your financial records have less detail than the CDP. For example, if your financial statements list everything together under earned revenue as one line item, you would ideally want to break that out into more specific categories for the CDP. This is actually less likely with a P&L than it would be with something like an audit. Usually the P&L will provide a fair amount of detail. But if your organization prepares a financial report for the board, or you just get some information from a treasurer or a bookkeeper with higher level categories like this, it might be worth checking with them to see if you have more detail available, wherever they're tracking things day to day. Second, and this is probably actually more likely if you're working with a P&L or a spreadsheet, you may find that your financial records have more detail than is required in the CDP. So for example, if your P&L lists out revenue out separately for your 2 yearly concerts, you have a line item for your summer showcase and your fall concert on your P&L, you would need to combine those line items and enter them into the ticket sales and mission lines in the CDP. And finally, you may see differing language and terminology. For example, your records may have a line called class fees. For the CDP, you would use the line item education revenue for that data. In this final case, remember to make use of the definitions on each line of the survey to help you match your line items to those listed in the CDP. Each line item has a definition in the new Streamline survey. So let's move on and look at a few new concepts to be found in the new revenue section. The first is the difference between attendee-generated revenue and program revenue. So here's the new revenue section. Even though the earned revenue section still exists, we have reduced the number of line items. So you might have items that you earn revenue from that aren't listed here. That's more likely than before, possibly. So in that case, if you have revenue that doesn't correspond with any of these lines, there are fields provided at the bottom of this section for any type of revenue that you haven't included above. Here you can see those lines, and you'll notice that these lines for items not included above are broken down into a couple of categories. The first is attendee-generated revenue. This is defined as revenue from additional spending by individuals attending your programs. So an example would be gift shop and concession sales. So if you have folks coming to programs and you're also selling candy, the revenue you make from selling candy to those people coming to your programming would be considered attendee-generated revenue. The second category is program revenue. And this is slightly different. This is defined as revenue from this is defined as revenue generated directly from mission-related activities. So example would include if you have a non-fundraising event, so some kind of special event that is not intended to fundraise, but is part of your mission, and you earn revenue from it. So why do we collect this data in this way? Attendee-generated revenue is a concept that provides a more complete picture of what you earn from program attendees. So if you think about it, if you have people buying tickets and also spending on concessions while at your program, all of that revenue is coming from the same pool of people. So there are instances where it can be helpful to analyze it all together. Program revenue, on the other hand, illustrates how much of your earned revenue is from mission-related activities. So this concept is frequently used in our reports to funders. So we've designed the new earned revenue section so that we can still report and analyze the data with both of these concepts in mind. Another new concept that you might see is we've added a line for special fundraising events revenue. This will be in the contributed revenue section. Special fundraising events are defined as things like dinners, galas, auctions, or walkathons, anything organized to raise funds to support the organization's activities. Like all line items in the revenue section and throughout the survey, if you don't hold a fundraising event, you can leave this line blank. If you do hold a special event, you can report the revenue in that line in one of two ways in the CDP, either as gross or net. Gross is probably the simplest approach. That means that you'll just report all revenue that was raised via the event. If you report the number as net, that means you're making a calculation, and you're going to calculate this as all the revenue that you earned minus the expenses associated with the event. If you report your revenue as net, in the CDP will also ask you to identify and report the fundraising event expenses that have been subtracted from the event revenue. Here we can see what this looks like in the profile. Again, if you don't have a special fundraising event, you'll leave this line blank. And if you report it as gross, that's probably the simplest approach here. Next, we'll take a look at the expenses section. So let's start with what has not changed for unaudited organizations. The expense section is still subdivided into personnel and non-personnel expenses. We have retained the 3-column functional expense format for program, management in general, and fundraising. This format enables key insights like return on fundraising and investment in programs, and is also required in the 990. We will still include a breakout of payments to artists, marketing expenses, and digital program expenses. This last breakout is optional. You don't need to do that one. Here we can see how the expense section looks for unaudited organizations. We're looking at the personnel expenses here. I do want to note that we still have the same 3 columns, but the order has changed. We used to have the fundraising column in the middle, and we've switched the order so management in general is now in the middle. This now matches the layout you'll see in your 990, but it is a shift, so I just wanted to call your attention to it. Now let's take a look at this section for organizations under 50K in expenses. The expenses section will also be subdivided into personnel and non-personnel expenses for small organizations too. If you do not have any paid staff, you can leave the personnel expenses section completely blank and just skip it. Instead of 3 columns in the expense section, small organizations will be asked to enter an estimate of what percentage of their expenses fall into each of those 3 categories. This estimate will be entered at the bottom of the expense section. This expense section for organizations under $50,000 in expenses will also include a breakout of payments to artists, how much of your expenses were related to marketing, and how much related to digital program expenses, also still optional. Here's what the expense section will look like for organizations under 50K. So here you can see there's just 1 column for all of your expenses instead of 3. And at the bottom of the page, we see a place where you will estimate your functional expenses. Now, these allocations between program, management in general, and fundraising are not new to the data profile, but they can be a little tricky, so I want to take a moment to talk about them. So you'll allocate your expenses basically by going through the major expenses you have and deciding where they fit. Some expenses will be allocated to one category. So an example where this will be pretty clear is all the costs you incurred for your arts education workshop would probably be considered program costs. However, there may be other expenses that are not entirely related to one category. So this might be especially true, for example, for salaries. You might have an executive director who does a little bit of all 3 of these things. In this case, you want to use an allocation method to divide those expenses up between the categories. One example of an allocation method you might use is you might use time tracking. You might ask your staff member to keep track of their major activities for 2 weeks or maybe a month. And then using that information, you might extrapolate how much of their total salary is related to each of those functions. There are actually a lot of different ways to do cost allocations. Here are some more resources with information about these concepts. The main thing to keep in mind is that you want to choose how you will do your cost allocations and then stick with that and use it the same way going forward each year. Okay, so let's focus on what has changed in the expense section. And this is going to be similar for both types of organizations on our call today. The main change is that we've made a drastic reduction in expense line items and the non-personnel expenses. So let's take a look at this. So if we look at the non-personnel expenses, you can see that we really only have 3 specific lines left in this section. We have occupancy, interest expense, and depreciation. This is very reduced from the current profile. We have about 17 different lines. Let's take a look at how you might approach this new expense section. So in this example, we're again looking at a profit and loss from accounting software like QuickBooks. But if you just use a spreadsheet to track your expenses, the process will be really similar. In your financial records, you'll first enter any line items related to personnel expenses. Then you'll locate and enter anything that would go into those 3 specific non-personnel line items I just showed you. And finally, all your other expenses will go into the last line. Let's walk through this process. So in this particular P&L, we can find the personnel line items at the top. This includes instructor fees. Those are likely independent contractors, and then payroll expenses for our staff. So these expenses would be entered into the personnel expenses section. Here you can see that I've done that. Just a note here, I've entered the instructor's fees from the P&L in the program column under contractors. Same with the program coordinator. But the executive director's salary I've allocated across all three of those columns. You can see how this would work with cost allocations too. Next, we would go back to our P&L and see if we have any of those three specific line items. So I can see that this P&L does include depreciation. It also includes several expenses associated with the organization's rented space, including insurance, rent, and utilities. So we would go back to our CDP and we would enter those two line items into the CDP. Notice I'm continuing to use the three functional columns. This is the view that an unaudited organization would see. If you're under 50K in expenses, you'd just be entering these into a single column. Also notice that since my organization does not have any interest expense, I'm just leaving that line blank entirely. Then our last step will be to put the remainder of our expenses into this last line. There are two ways we might do that. The first is to subtract. So if we start with our total expenses from our profit and loss, subtract what we've entered so far, personnel, and the two non-personnel lines, we would arrive at all of our other expenses. And that's the amount that I would want to put in that final line item. The other option would be to add. We could add together all the line items we haven't entered yet. Which approach you take is probably going to depend on how many line items you have in your financial statements. If you have very detailed statements, it might actually be quicker to subtract. Note that if you are working with those three functional expense columns, you'll want to keep those in mind while you do this. If you are under 50K in expenses, you would not need to divide all of your expenses in that way. So why have we reduced the expense section in this way? Expense details actually vary a lot between organizations. Each organization's operations are very unique. We know that because there's so much variance in the categories that organizations use, matching your expenses to the current CDP can take a lot of time. In addition, this data is not frequently used for research because it does vary so much between organizations. The line items and breakouts that we have retained are fairly standard across organizations. They're also used in key financial health metrics in research, which is why they're still there. But the rest of the detail and expenses we've decided to remove to save some time. Next, we'll look at the balance sheet. So to start, just a reminder, organizations who are under $50,000 in expenses will not fill out a balance sheet. Next, let's look at unaudited organizations whose expenses are over 50K. The basic structure of the balance sheet remains the same. You'll enter your assets and liabilities, and your net assets will be calculated at the bottom. You will also still enter your balance sheet in a single column format. Here is the new balance sheet for unaudited organizations. So what has changed? There is an overall reduction in line items to include less detailed line items. We've removed some detail sections, including endowments, loan details, and fixed assets details. However, we have retained two line items, your line of credit limit and your accumulated depreciation. Just a couple of notes about both of these items. So accumulated depreciation is an accounting estimate of the decline in value of all your fixed assets due to wear and tear or obsolescence. This is the idea that, if I buy a building today, it's not going to have the same value in 50 years. So we want to think about how it's losing value over time as we have to maintain it and eventually potentially replace it. You can find this information on internal records. You may want to ask a treasurer or talk to a treasurer about your organization having a depreciation schedule. That's where you would find this information. If you don't have fixed assets, you can leave this information blank. Your line of credit is the amount your organization can borrow on a revolving line of credit with a bank or other financial institution. I did want to specify here that this is specifically a line of credit from a bank. If you have credit cards that your organization uses, the limit on those credit cards is not something that you would enter into this line. If you don't have a line of credit, you can enter 0 here. Next, let's look at workforce and workspaces. So these sections are very similar for everyone on this call. So we'll just go ahead and look for everyone at what has not changed in this section. So we are no longer collecting, what has not changed. So in workforce section, you'll still enter the number of positions of each type. You'll also still enter in workspaces up to 5 workspaces. You'll enter the addresses and a few other details about those places that you work. What has changed? So we're no longer collecting hours worked in the workforce section. However, there is a new column for turnover. Turnover refers to the number of employees who left their positions, retired, or were fired. You should include staff who were laid off, but you should not include departures that were built into the position. For example, if you had a fellowship with a specific end date in mind when you hired the person. Next, we'll look at program activity and what has not changed. We still collect high and low prices for tickets, members and subscribers. We still collect the number of programs. We collect the number of attendees. So the format is a little different. We'll collect your attendance as one large number as opposed to specific numbers for each type of program. So what has changed? First, we have one standard program activity section for all organizations. And in the current profile, we mostly focus on in-person activities. In the new profile, you'll be able to report physical and digital programs for all types of different programs. Let's take a quick look at this. We did look at this in depth on Tuesday's webinar, but this will be just a quick review. You'll notice in-person programs on the left, digital programs on the right. For in-person programs, you'll enter both the number of unique programs and the total number of times of programs that were offered. For example, if you had one show and offered it 4 times, you would report one unique program, one distinct offering, and 4 times offered. For digital programs, there is also a distinction between live streamed and on-demand programs. Live stream means that the attendees have to be seeing your program as it is being performed or taught. On demand means they get to watch it whenever they want at a time of their choosing. Another change is the addition of renewal rates in the membership section. You can see them listed here. Renewal rate is defined as the percentage of last year's subscribers or members who renewed in the current fiscal year. To calculate this, you'll first start by gathering a bit of data. You'll need your membership data from the previous year. You will then look to see how many of these members renewed for this fiscal year. You'll take the number of renewed members and divide by the total members from last year and multiply it by 100 to get a percentage. A note about where to find this data. If you have an internal CRM or database, there may be reporting tools that help you to find this information. But if you don't, if you have a small membership program and you track it using lists or spreadsheets, you can also get this information by just comparing those 2 lists from year to year. So we've added this data point because it's important to help understand the loyalty and retention of your supporters. Having this data for research helps us understand the member and subscriber patterns across the sector. Okay, so to wrap up, I want to give a few notes about what will happen to your current data. All of your current data will be transformed to the new format. This will mean that trend reporting will be possible from one year to the next in your funder reports. We will also make a data transformation map available and provide notations of what's happened with your data within the survey. I want to leave you with a few next steps. So you can download a copy of the new profile if you'd like to see it at the link here. You should also plan for a platform shutdown coming up on the weekends of Friday, December 11th to Sunday, December 13th. And again, Friday, December 18th to Sunday, December 20th. And then you can log in on December 21st to see your data in the new format. We do have one more webinar coming up in our series about the narrative questions. That'll be this Thursday, so you can join us. And that will bring us to the end of today's program. So we're gonna stay on the line to answer questions. If you need to jump off, we are at 1:30, so feel free. We will be happy to answer questions too. You can get in touch with our support center. But we will stay for a few more minutes. So I'm gonna actually turn it over to Dan to see if there's any questions that we can address.
Thank you so much, Katie. There's no really pending questions at this time. However, I just want to reiterate something that came up this time and came up on previous webinars about special events. We get questions about specific days being an event or Giving Tuesday. We just speak to the idea of special events.
Yeah, definitely. So in this case, by special events, we mean a particular event. So It doesn't need to be an in-person event anymore. You could think about like an in-person gala, or maybe just an in-person party you might hold in order to raise money, or you might hold an online event with the idea that it would raise funds for your organization. But if you're just doing a specific campaign, like if you're using Giving Tuesday or something like that as a way to kind of ask people for donations directly, we wouldn't consider that an event. That would just be, a campaign to ask for individual donations.
Thank you so much.
Okay, great. Well, if that's all that we have in the questions, we're going to go ahead and close out the presentation portion of the webinar. I want to leave you with the support center information. If you do have additional questions, you can always contact our wonderful support center. And we will stay on the line to address any other questions you want to put in the chat for a few minutes here. But thank you all so much for joining us today.